Good evening, everybody, and welcome to another edition of Live Market Analysis. It feels like I've done 3 of these today. It's such a pleasure and it's so exciting for me to be here, the anticipation alone. Now, for the people that are listening on the recording, we did have some technical difficulties today, but resolved for your benefit. Let us go to the disclaimer before we move on, which says that the content of this presentation is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this information, you should consider it carefully against your personal objectives, situation, and needs. Take all reasonable steps to fully understand the possible outcomes of all of your actions or seek professional help. The rest of the information in the disclaimer there is important as my microphone crashes. Consider it and remember that you're responsible for everything you do in markets, not me. The agenda for this evening is very simple. Get your requests rolling in. I'll answer them to the best of my ability, give you my best technical read-up, or you can ask me anything about trading in general, so methodology, money management, and mindset. Let's head over to the Amy Broker screen first, where we'll very quickly do the money management. That's not money management. That's Life 360. What a wonderful looking chart that is. And look, maybe I digress. Maybe on that candle, maybe it gave you a reason to sell a third on that candle, but it was so far above the light green ribbon, I don't think you did. Certainly back there, you would have taken some off the table. But apart from that, look, what a wonderful run that is. And for the people watching the recording, the reason why I'm not perfectly ready for you today is because some of those technical difficulties. So bear with me as we head over to the Nasdaq Composite. I'm not even in the right chart. There we go. What a huge amount of world shaking events have occurred since we last caught up Monday on the 4th of November. Of course, last week, the Trump win, the red sweep. You couldn't have got any better for him. It couldn't have got any better for the Republicans. And as it turns out, that was, as I had discussed in articles in the lead up on Market Index, widely considered to be the best case scenario for the markets. And obviously, we saw a rally as a result. That is Wednesday, as markets started to become aware of this possibility. Thursday, we knew it was going to happen, and Friday continued follow through there. I should say that might be Tuesday, Wednesday, Friday, and of course, Tuesday, Wednesday, Thursday, that's the Friday candle. The upshot of it all is last week we said full risk position, but don't add in any risk. If you're going to add risk, take some other risk off the table. Just be careful, let things roll off if you need to, because we will look at that horrible black candle, total wall of supply, of course, still within great trends, but we're being cautious. Just remove that cautious stance, or remove that cautious part of the sentence, and just keep the full risk position part of the sentence based upon what we can see. You see I haven't had a chance to update these yet, but you get the gist of it. That's obviously going to turn light green, and the uptrend ribbon is going to move that way a bit. What would change? Big black candles. What does a big black candle look like? Look, that's big. That's bigger and better and more indicative of what to be worried about. Certainly that's a good example there, just tuning your eyes into the sorts of candles you don't want to see, and then you don't want to see them followed up shortly thereafter by other black candles, lower peaks, that sort of stuff. We're not seeing any of those, so nothing to worry about here. FRP is the order of business. Heading to the Russell 2000, and we obviously know that S&P 500, big cap stocks, Nasdaq, it's got a wide range of stocks in it, but it's market cap weighted, so that it's the big stocks, your Magnificent Seven, that really move that index, and not the other 4,500 odd stocks X those 7. The Russell 2000 smaller cap stocks, the top 5 or 10 stocks here really only account for a very small percentage. It might only be 4 or 5%, whereas the top 5 to 10 stocks of the Nasdaq account for 70, 80, 90%. Don't quote me on those numbers. I'm very close. I did actually write an article with those exact numbers in them. Go Google it and you can find it, but order of magnitude we're talking. So the theory here is that that Trump win, that red sweep, make America great again, onshore as much production, manufacturing, services as you can. It's going to help US businesses, but it's going to help the smaller businesses, mid-cap and small businesses more. That's going to help you big multinationals, of course, that have businesses all over the world. They're going to be less benefited by Make America great again. So this is the theory here. This is why markets have absolutely just surged when it comes to these small caps and mid cap stocks. I don't actually have the mid cap index here, but trust me, it looks very similar. And again, it's good. It's breadth. It's the heart of corporate America. So don't look at this as, oh well, this is a bit juiced. It's a little bit on steroids. This is actually very, very good. We just need to, look. It's not, I was going to say we just need to keep seeing. We don't need to see that sort of price action. We just need to see it not go, not the black candles. That's all. So even if it hangs up here for 6 months, it could still be very, very beneficial for stocks within the index for trend traders like us, because we're not necessarily trading the index, right? We use this for our money management, but we're searching within the index. And trust me, as long as we're double green here, there's going to be just oodles and oodles of opportunity. So that should make you pretty happy, whether you're a Trump supporter or not. It's turned out well if you're an investor. If you get, there's the mid-cap 400 there. There's the big white candle on the 400. But isn't that fascinating? Definitely gains there, no doubt about it. But look at this and then look at that. You can see the mentality there of our fund managers. Let's head over to Europe. Oh, wow. Make America great again. He said, he didn't say make Europe great again. He didn't say make Asia great again. He didn't say make Australia great again. He said make America great again. So that excludes France, that excludes Germany, that excludes all of Europe, that excludes the United Kingdom, funnily enough, and it also excludes Spain. Who would have thunk it? Let's go to Asia now. It's looking not bad. There's a bit of a dance here. Bazooka, Chinese fiscal stimulus, which would be wonderful, versus Trump's 60% tariffs, potentially 100 or 200%. This individual has said, because you never know what he's going to say, do you? 60% is what we've heard in the past, and then a couple of Thursdays ago he said, I'm not going to do the imitation. There's some great imitators out there, but it's not me. 100, I could do 100%. I could even do 200%. We don't know what he's going to do. Look, not bad for Japan. Isn't it interesting? Asia's fared better. No, not so great for India. Not so bad for China. Not so bad for China because of the promise of stimulus, which didn't occur. Oh my gosh, where does that leave us? I'm not even sure. Not in a terrible place. We're a little bit lucky, aren't we? I mean, lucky in terms of we saw what happened in Europe. We're maybe tying our wagon a little bit more to the Asia side of things. I don't know, I think at the end of the day, a very strong US economy is good for Asia, isn't it? Ultimately, and maybe that's why China hasn't been hit so hard by these fears of tariffs. Maybe the market knows something we don't. Just a quick whiz through the sectors just to see. I think it's really very relevant now in this post-Trump red sweep era to get a feeling of which sectors are going to benefit from that, or at least investors are seeing thus. Discretionary, look, not too bad overall, pretty good trend. Let's zoom out to our normal range to get some perspective there. Energy, yeah, look, the theory here is, of course, he's going to encourage investment in finding more energy. He's going to be more pro-energy sector. Hey, probably some donations are helping in the mix there. So the theory is that if that unlocks more crude oil supply, particularly in the US, then that could be a dampener on crude oil prices. And that's why we've seen crude oil react fairly negatively to that Trump win, okay? He's also less pro-renewables, so that's probably balancing it out. We didn't see wholesale sell-off in energy, but the general feeling is that he's slightly more bullish energy supply, which is therefore softer on prices. But none of the big brokers that I read research for us predicting huge declines in energy, but they're certainly not predicting big gains. Geopolitical factors, Middle East factors notwithstanding, of course. Financials, a big beneficiary. Look, I don't know. They just can't be beat, even though we've seen a big rise in bond yields. We'll talk about that in a second. That big rise in bond yields post-Trump's win has not helped the gold sector at all, and that's what we're seeing there. Healthcare is getting a bit of a boost. Really, anything high PE, long duration is getting a boost. Anything with US currency exposure. A lot of our big tech stocks have massive US currency exposure. I'm thinking Wisetech. I'm thinking ResMed, a great example of that. Life 360, did we speak about that before I changed it, before I restarted the recording? People listening to the recording have no idea what I'm talking about. Let's go to materials. Until today, very little response really from last week, relatively speaking, but today was about the disappointment on that China no bazooka from the NPC on Friday. But they're not forthcoming on these things. They'll do it when you least expect it. So I don't know why people got so excited about that. Property trust initially was a poor reaction because of those bond yields. They've actually bounced back the last couple of days. Staples, well, that's stock specific. We're seeing Woolies get belted. We're seeing Coles underperform. We're seeing Endeavour get belted today on earnings downgrades. It's a tough gig out there in supermarket land, but the trends of your friends, fortunately, like you guys don't care about it. You guys don't own Endeavour. You guys don't own Woolworths or Coles. You don't own Metcash. If anything, you've probably been shorting those things. So that's okay with us. Telecommunications is fine. Utilities, a bit of a bod market proxy, so getting hurt by those higher rates, and we are down the list again. I'm fascinated. I actually haven't looked at this chart all that much last week, so I want to look at it now. I had to check if that was a daily chart, because you don't often see massive swings overlapping big white and black candles in a currency unless something big's going on in the world. And of course, something big has been going on. So, kind of a positive response, then a really negative response, and implied, look, that such is the question marks that are being thrown up in global markets as a result of what has happened last week. Were you surprised? I don't know. Let me know. Were you surprised by the events of last week? Maybe you weren't surprised by him getting in, but maybe you weren't surprised by just how emphatic the win was. I think that's what surprised me. I don't think anything surprises us after 2016, but just how clean that win was. No complaining about hanging chads, if you were, or machine rigging. Did you hear anybody complain about rigging of machines this time round? Rigging of elections didn't happen, did it? This was the cleanest election in the history of mankind, maybe longer, if you get what I mean. Let's go to the line charts here for that's just the way he speaks, isn't it? I wish I could do the voice. It would have been even funnier. Let's have a look at aluminium. A little bit of a mixed response here, but not terrible. I think we're looking for terrible responses here. Copper's not great. Iron ore, we know, came down today. You won't see it there. We'll look at it in another place. Nickel, still weak. I think these are continuations of what they were doing before. Zinc rolling over a little bit. I'll tell you what's interesting today, because we haven't seen a lot of things that are interesting. But this is an interesting chart for me on the day, a little bit tongue-in-cheek, I'll be honest. I caught the bottom in lithium minerals prices. It's tongue-in-cheek because, well, I don't think we have seen the bottom for now, as in we're not in rampaging, horrendous short and long-term downtrends. The short-term trend has changed. The price action has changed. We've got high peaks and high troughs, and we've had that for a couple of days. And I think the candles, will agree with me, for the last, say, 10 or 15 candles have swung, I would say, edging towards predominantly white. I know I'm riding the fence a little bit there, but I think predominantly white on the last 10 or 15 candles. And that all that does is it takes us out of a short-term downtrend into a neutral trend. But I'm going to say today, with that big white candle there on the lithium carbonate futures, benchmark futures, nice big white candle high close, we are short-term uptrend. That's a call I can make before the short-term trend ribbon turns green, because we have closed above the trend ribbon, and that trend ribbon I put to you is acting as a bit of a dynamic demand zone now. You can see where it was, where we've been for the last few days. So by definition, my definition, which I'm not making this up, I've told this to you before, that is the definition of a short-term uptrend. The long-term trend is still very much down, but I see scope here with elevated volume for the last few weeks, and this is, I've been tweeting about this. This is seasonally a strong time for lithium. You didn't see it all that seasonally last year in November. Why? Because it was a different market. It was an acute bear market. We were just a wall of supply from converters of lithium carbonate to lithium hydroxide, and that was pushing prices down. But what I think we'll find this October, November, next October, November, now we've kind of got rid of that overhang, probably more seasonally strong time of the year. So this stuff doesn't surprise me, and the increased volume doesn't surprise me, and hence I made that call. I won't look at any of the other ones. I don't think you need to. I think you can do that work yourself. Let's head over to the Amy Broker trading view screen and just finish off this whip around the grounds in this fascinating week we've had. One of the casualties of the sweep. And you might say, hey, Carl, it's really not fair because gold and silver are looking great. And, Trump is still going to be expansionary. It's still good for de-dollarization trends, Fed printing, fiscal expansion. Those things are good typically for precious metals, and I totally agree with you. But markets didn't expect that red sweep. We thought we'd get Harris or Trump and a mixed Congress, so House or Senate in alternating control. It's the emphatic nature of the move that then pushes these instruments down. That we're just lacking uncertainty. If anything, gold is that hedge against uncertainty. We've lost uncertainty. You might say a Trump win, no, that's more uncertainty. No, it's less uncertainty. Like the outcomes from here are actually fairly predictable because of the emphatic nature of that win. So, and look, you can't see it coming. So if you're long to the teeth on gold stocks, putting RSG aside, you kind of can't beat yourself up about it unless you had all gold stocks and you were just being irresponsible with your asset allocation, your diversification. But that one, unless you knew, I knew that was going to happen, but then you would have positioned yourself accordingly. The copper was starting to look good there, wasn't it? Again, markets weren't expecting what was happening, and that has the China tariff question mark has come into that chart and that chart. Uranium is moving to a beat of its own drum, especially when you consider that in theory it's pro-Trump. Yes, pro-Trump because he's telling we need to build more reactors than ever in the history of mankind, maybe longer, and that hasn't helped the uranium price here. And then if we quickly look at some of the energy contracts, you can see why we've seen a subdued move to the downside here, but nonetheless a move to the downside. Energy, I think, when you look at, say, thermal coal, probably not all that impacted, but perhaps coke and coal will see some weakness in that. In fact, we're not. So let's finish off with a quick look at the bond market here, and we'll have a quick look at the pop post that Trump win. Net, however, it's actually negated. We've actually seen that initial push higher come back, and that's probably why the property trust we saw before have had a couple of days of bounce, and that was partly due to one of the question marks, which is the Fed response. So the Fed could have come out and said, you know what, this is going to be hugely expansionary and we may reconsider our position. Jerome Powell, to his credit, I think a very sensible, a very calm man, relatively speaking, relative to other people out there in US political and regulatory spheres of influence, said, you know what, we look, obviously we're going to be alert to these things, but we're on this path. We think we're still too restrictive. We can see signs of the economy is weakening. We're going to continue to remove some of that restriction at this point in time, but obviously we're data dependent. And if there is a fiscal expansion at some stage, we'll obviously look at the data and assess that. By the way, Mr. Trump, you can't fire me. He also said not permitted by law. So that some of that uncertainty removed some of that upward bias to those US rates. Bringing it back home, we had obviously our own RBA meeting, and Michelle Bullock, again, I think she's wonderful. I think she's like a breath of fresh air when it comes to central bankers, because she's very pragmatic and only says what she needs to, and sometimes that's all we need. We'd like more, but that's all we need. We get told what we need to by Governor Bullock, and she was very forthright that she still sees risks out there. Things could accelerate. And they're not going to, fall into the trap that many other central banks potentially are falling into and cutting rates too quickly. But again, data dependent. And I think markets, obviously we had our carry trade unwind, and that was, what a year it's been. And we've seen markets start to believe the Reserve Bank through here, and probably, I think, fairly settled. I think on interest rates in the near term, actually. I think we've kind of made our moves now and we've made our bed and we need to lie in them. And that's good, that's okay. If we see these interest rate charts going nowhere, like that's our best case scenario. Look, they come down, it's okay too. We don't want to see them go up. But if they go nowhere, that's still, it's a very fruitful, very fertile environment for stocks, I think. And ladies and gentlemen, that is the whip around the grounds as I see it. I'm sure somebody much smarter than me is going to give you a much smarter interpretation of things. Let's go back to here and have a look at our offline requests for Australia. So I'm going to go to that watch list. And we're going to kick off with Colin. Colin wants us to look at IPX, which is doing it very, very well. Iperonix, I think, obviously the last time we looked at it here was FRP. I wonder what you think. What would you have done if you had it? Maybe you do have it, maybe held through it. I don't know. You don't have to type it in, but think about if you had it at our last juncture here, would you have held through here? What would you have done through there? I can't see anything really, really terrible, but I do think I would have taken a little bit of risk off the table, and I think it's probably, on that day there, I probably couldn't give it any more room, even though, let's undo that and do it in a colour we could see. Let's maybe go that one and then draw it in there. So I think because of that closing beneath this trough here, I don't think I could go any longer. There's nothing really after that that's kind of warranting it, because our next peg becomes under here, and the candles weren't terrible. That wasn't great, but it didn't close anywhere threatening. And then the rest of them are all fine until you get to here where it's adding back risk. So, this candle isn't bad because of the lower shadow closing the zone, but I still think in my heart of hearts, I don't think I could have just in good conscience held on to that third. So I'm still 100% 2/3. There's absolutely no doubt about it. And then adding a third back there, and kicking myself a little bit. I probably didn't need to, but such is life, and that's how we go. And then obviously today is still magnificent. FRP blasting through $4 like it's not even there, and plus 1/3 because that candle is fantastic. I know there's a little bit of upper shadow, but the pedigree here is amazing. So a bit of a demonstration of how it works. And I think the critical aspect here is we're looking at this and we're not going, oh, geez, I have to sell here. It's, look, I'm going to take a little bit of risk off the table because I want to use that risk on something that's showing more momentum. And it's easy here. It's easy to say here, oh, you shouldn't have sold it. Or it's easy to say, yeah, okay, I get why you did sell it. But you weren't, we're here. And I think here, things are looking very different, aren't they? They're going to look different. They're going to feel different. Sometimes feelings do come into it. So I think here I think there it's fair enough to take a third off the table. We are still, of course, full risk position plus 1/3 for you, Colin. Let's go to Adrian, who's got ARX, asking us a turnaround setup. And on that quick first pass, 100%, it does look like a turnaround setup. I'm going to zoom out because I need to get my perspective here. And I totally agree with you, Adrian. I'm glad you told me what you're thinking here, because it demonstrates to me that you completely understand my trading methodology. So our turnaround setup is when, obviously, we have a short-term uptrend in place. We should see, by default, rising peaks and rising troughs. There's a little falling trough in there, isn't it? Just to make things a bit more complicated. I think generally the price action is improving. We see some nice candles coming in. I will zoom in now because I want to point out this nice candle here. That's the kicker, isn't it? I don't think I'm going wrong like you, Adrian, on that candle. I think I'm still waiting for confirmation. I think today's candle is that confirmation. And of course, the key is that we are interacting with that long-term trend ribbon. It's transitioned to orange, and it is starting to demonstrate dynamic demand now, not supply, because look what it did before. Look what it did before. That's why this time we wouldn't have been looking at it for a turnaround play, okay? Oh, this time it actually got through here, but it didn't dink, did it? On the dink, it failed. Here's the dink. The dink is a little bit more than I would like. Look, I think this is a turnaround setup. I agree with you. I don't think this is as strong as a turnaround setup as maybe we're going to see later on tonight, although I don't know. But in terms of turnaround setups, I'm going to give this a very solid, or I think it's more than 7. Maybe it's less than 8. 7.5 out of 10 is the way I would rate this. And this is extremely subjective, isn't it? It's extremely subjective, because I can't say to you, oh, look, here's the algorithm as to how you get to 7.5 nonetheless out of 10. It's a little bit of common sense based upon me teaching this to you and you looking at it every Monday, Tuesday, Wednesday, Thursday, but especially on Mondays to get to I want you to come to that feeling, okay, it's very warm. There's some good stuff there. What's bringing it down from 10 is this last, we have got lower troughs, don't we? But this last trough really should have been coming in a bit higher. Ideally, it's coming in above the long-term, not above, but at least on the top part of the long-term uptrend. It's a very good candle. It's an excellent candle. Don't get me wrong. I'm starting to sound like Trump, aren't I? Don't get me. I think it's a very good candle. It's an excellent candle. But yeah, it could be a little bit better, and that's the only reason why it's losing a little bit there. And when we get to the end of tonight's list of turnaround setups, we'll be able to judge the 7.5s against the 8.5s, the 9.5s, the 10s, the 4.5s, and we'll have a better idea. Now, I will conclude for you, Adrian, by saying that if I can't find anything else, and this is the best turnaround setup, and I do want to have a mix of turnaround setups and continuation setups and aggressive setups in my portfolio, 100%, then on that basis, absolutely, you've got me. Yes, 100%, I'm with you, FRP plus 1/3 based upon that candle. I'm not too fussed about this. Yes, there's going to be a bit of supply coming in here, no doubt about it. From there to there, I've picked this peak here and this peak here for my drawing, and I will make that magically go across. Okay, and the reason why I'm not worried about it is we're testing it. Yes, there was a little shadow today. We should expect that shadow. When I see shadows where they're not supposed to be, I get a bit more concerned, but that shadow is exactly where I expect it to be, and it's still a very high close, all things considered. So I'm not fussed about that supply. We're in that supply, we're testing that supply. Today showing us it's not really a major issue. And the great thing is I've already drawn in the next point of supply. It's miles away. We've got ages and ages in terms of our reward to risk. So that's starting to warm it up a little bit. Don't forget, setup and tradecraft, they're two different things. So setup, it's still 7.5 out of 10, but the tradecraft is certainly looking more like like a 2-to-1 or a 3-to-1, and we'll compare that to we'll compare our other setups not just on the basis of their score out of 10, but on their reward to risk at some stage as well. But the important thing is, and I've broken my rule here, I shouldn't be doing tradecraft at this stage. I do it subconsciously. You'll get to the point hopefully where you can do it subconsciously because it will save time down the track. But you don't want to do your tradecraft here because you need to get to the next chart. You need to get to the next chart, the next chart, the next chart. And then you make that list small and you make it small again and you do your tradecraft on the small list. Because if you try to do your tradecraft on your big list, you're never going to finish that list. Let's go to PPH, which is Adrian's second one. Wonderful. This is one, obviously, with full risk position. Last time we looked at it, there was no reason to sell any. I'm pretty sure first time I ran this one, I don't know. You'd have to go back. 100% I know it would have been there, and I know it's probably there. Definitely there. There's a few times that I've put this in my watch list, and I want to say maybe even a few more times than that. I might have even had a nibble there. I can't recall. But what I want, and the important thing here is that there really haven't been any signals, any obvious signals that I can see there, just off the cuff, for us to do nothing or to do anything but hold every single share. This is the wonderful aspect of this model that I'm teaching you, is to hold every single share until when, everybody? Now you do need to type in the answer, please. I just realised I can't hear you if you've been talking to me because that cable's unplugged. It's not doing anything, but I'll plug it in now, and now I can hear you if you need to talk. You should be responding. I'm sorry if I put you to sleep there, but wakey, and tell me what do we need to do? We had to do it today. I hope that Adrian did it, past tense. Do not pass go. Do not collect $200. Come on, everyone. Typey. What should we be doing? If you haven't seen it, say, I don't know, Carl, just so I know you're alive. Jackie's got it. Good. Haraji's got it. Nicola's got it. Absolutely. So up here, this is the model. Do not pass go. Do not collect $200. Oh, but Carl, and the shadow's there. That shadow is not there by accident, ladies and gentlemen. Okay, it's there because I bet you there were people, and I'm not far off it. There are a bunch of people. In fact, I've nailed it. There are a bunch of people who are trading, who are getting in, who are building position at 50 cents. And if you are a value-based fund manager doing your fundamentals, you'd love knocking in 100% profit. I'll tell you what, you're going to knock that thing out as quick as possible to pay for your Endeavour shares that you're holding, and your Woolworths shares, your Domino shares, your Ramsay Healthcare shares, and all the other crap in your portfolio, because this is easy money for you. Patty on the back. I doubled my money, and that's going to help me get my quarterly bonus, hypothetically speaking. But yes, for us, it is a rule because the market wants to supply there. We want to supply there as well because we follow the market. We are trend followers, ladies and gentlemen. We don't make the trends, we follow the trends. And that's why we go minus a third. Do not pass go, do not collect $200. Okay, what does it also mean? Unlike the fund manager who's going to sell all their shares at $1, and then when it gets to $2, lament the fact that they sold them at $1, but remind us that they did buy them at $1. So they did buy them at 50 cents and sell them at $1. I'll definitely say that. Oh, I had this one. Yeah, I sold it too early. We're going to hold until it gets to $2. We'll still have some when it gets to $2, and we might have added back this third, another 3/3 by then. But there's no need to do that today based upon that last shadow. So we are 2/3 plus 2/3 RP That's what's remaining here, and there's nothing else to do, okay? We don't need to respond to that upper shadow. We already have the candle, otherwise is fine, and it's indicating for us to hold every single share. Now, that might be different tomorrow, it might be different the next day, depending on candles and price action, but we are equipped with the tools to decide what to do when we see that. Let's go to Mick. Mick has AXE, which is not ringing a bell. Archer Materials, okay, that's white. Well, you can see why it's not ringing a bell. It's not coming up in any of my scans. Probably not far away because Mick has correctly asked me about these, as turnaround setups. And I really love it when people are sending me email requests and they say, Carl, I'm thinking about this as a turnaround setup, or as a continuation setup, or as an aggressive setup, okay? Because it's showing me that you either understand the model or you don't understand the model. And yes, I think this is a bit early for a turnaround setup, Mick, because look, typically the trend ribbon will be amber. It's not quite there yet, and you might say, Carl, the price action's good, and I agree with you. The price action's good, so we're going to go tick on the price action. We've got rising peaks, rising troughs, tick. We've got a short-term uptrend. It's a very nice short-term uptrend, isn't it? There you go. The short-term uptrend is providing dynamic demand. I think we've got a predominance of some demand-side candles. Look, a couple of these that just give me a little bit of cause for pause. But look, today's candle is emphatic. I'm happy with it. Above average volume, we're clearing out some of that supply. We're building interest. We've had some reactions before. We've got a little bit of a base pattern going here. Not as long as I'd typically. Well, I guess it's probably more like that. So we'll go tick on the base pattern. There's plenty of ticks in the boxes, but I think we're missing a couple of important factors here. And as I said, the first one, ideally that we've gone to neutral here because we don't want to mess around with the dark red ribbon, do we? We've learnt enough. If you've learned anything, you've learned to respect that ribbon. And the other thing we're missing for me, I think still, is this a dink? I don't think it's enough of a dink here. I want to see that supply come in. I want to see the supply come in. Well, Carl, that doesn't make sense. Aren't you thinking about maybe buying this for it to go up? Yeah, that's why I want to see the supply come in. I want to see them try and defend this area. I want to see what they've got. And I want to see how the demand side responds to that. And if the demand side wins this battle, this is now the crucial battle, isn't it? So any sort of little dink in here, and I've got too many arrows on there, but you get what I mean, any sort of dink in here, that's when it moves into that turnaround setup, I feel. So we're very, very close. Mick, keep watching it. I'm not going to draw anything else, any like FRPs or anything like that on the screen right now because I don't think we need to. I totally accept it might be famous last words in that tomorrow's candle might be up here and you go, oh, Carl, why didn't you tell me to buy it yesterday? Well, I'm sorry, I couldn't see the future. What I would prefer is some sort of little interaction here, a little skirmish between the supply side and the demand side to win that battle, and then we will look at it then and continue to ask me about it next time, Mick, please. AVH. Well, okay, this is a great segue. This is dinking. Not only is it dinking, but we are here above the long-term trend ribbon. We weren't above it on the last one, and the long-term trend ribbon has turned orange. It was almost as if I predicted or I set these up in advance. No, I didn't. I promised you they come from Mick, and this is the order he's given them to me in. Now, whilst this one is more advanced than the other one, in fact, what I like about this is the substantial base pattern here. Like, I'm not going, oh, okay, maybe that's a few months. No, clearly a few months. Massive volume responses. We can see some building there actually, and a good little push and removal of supply here. So this one is very interesting for me. In fact, this one is ringing a bell for me now because I know that I put it in not as a feature chart, but I certainly put it in as a plus 1/3 there in the watch list a couple of sessions ago. Plus 1/3. Is my history on this one. I haven't seen it since then because it hasn't come up on my watch list because that candle, literally my scan is set up to not show me candles that look like that are black and have shadows pointing out each side. Certainly my scan is set up to show me a candle that looks like that. Okay, so I saw it on that day. I also saw it on that day. On that day, I felt the shadow was just a little bit too long for me to run it as a plus 1/3, although it met all my other criteria, don't get me wrong. That day there's slightly higher close, and I felt that was enough to run the 1/3. That day I didn't see it, didn't come in my scan, didn't meet the criteria, didn't meet the criteria. So I haven't seen this for the last 3 candles. None of these candles worry me too much. They're far from ideal. Obviously, we'd love white candles, not black candles. But that lower shadow is reaching down into and telling me that this area here is now acting as dynamic demand, and that is a good thing for this setup. I need another candle with a high close, don't I? Really, before we can do anything. This is dinking here, and that's what I want. The battle between supply and demand. And all we need now is for demand to win the battle. So really, something that looks like this, and it's going to have to be a good one, because remember I say, it's about balance. It's about the good that you want to see needs to undo the bad that potentially has already been seen. So as bad as this stuff is, we need to see good. Okay, so I'll draw for you something that I think would equate to a candle that's good enough, and it's about that much. It doesn't need to close above that high. People that wait for stuff to close above highs, okay, lose out on a great deal of profit. And often that is the delineator between them being profitable in the long run or not, is waiting for that breakout trading. This anticipation, this high close, using the candles, letting the candles tell us what's happening with demand and supply, not just following rules blindly that we read on the internet, okay? That's what we're about. And I feel that, it's that word feel, isn't it? I'm teaching a system based upon feeling. Yes, it's subjective, but it is a common sense system. I believe a candle that looks like that will tune your eye in. That's the kind of candle we want to see, not just on this chart, but on other charts that are seeing that interaction between demand and supply, and we want to see that goodness come in to equate the badness or overbalance the badness. That's the candle I want to see here. And if I saw that, then absolutely, that would be my next. So next high close plus 1/3 event. But we're looking into the future. Let's go to mix. Third one, LPT. I'm guessing that's not it, so I'm going to go up here, and go to the big list. LPT. I'm not finding it. I'll type it in one more time. I'm sure it's not going to work. LPT. And without going back to the email, I double check that I don't have a typo at my end for Mick. And dead air. I hate dead air. But doing you a favour here, Mick. Let's go. LTP. So it's a typo at my end. I'm glad that I came back. LTP, sorry Mick, and is this a turnaround setup? I'm not so sure. Into picture, allow this time, don't allow, don't know what that is. Let's zoom out. I've got a pop-up coming up, something about picture. Okay, look, what a great chart up to a certain point, isn't it? But I think we can all see, we clearly haven't done this one for a while. We said minus 1/3. Oh, look at this. Isn't that interesting? It ties in with our conversation before about round numbers and how we don't muck around. We just take our money and run. And interestingly, look at that shadow up there at $2. I mean, it just like... Come on, ladies and gentlemen, please. This shadow here, you actually would have got it on that day. I think that 1/3 is actually assigned to this candle here. And I don't think I had any other information, is my guess, because I said at that point, I wrote next to it 2/3 is what's remaining. But I'm going to put to you that this candle here, if you said, hey, Carl, I don't like the look of that at $2, I'm going to knock another third there, and I don't mind you doing another third on that candle there. Even if you didn't do that candle there, I reckon you certainly would do that candle there, because I don't think you can really hold past that candle. Can you? I don't think you can. And certainly on this candle here, I mean, they're not all the same trade, but these are opportunities to knock out a third. Are any of these plus 1/3? I don't think so, because we've got major supply here, and we need to undo that. We need to find that balance then. And I don't think that candle is it, and none of those candles are it. That's the closest thing there. But then this shadow would rule out that candle, in my opinion. And did you see this in the watch list? No, you didn't, because I would have looked at it on that day, and I would not have put it in because I didn't like that candle there. So I think the models worked really well here. And even if you did happen to hold through, that candle was pretty dodgy. And I reckon certainly that candle there confirming it, and then we have also, like this, there's really no reason to be in this trade. I mean, when I say no reason, there's beyond no reason to be in this trade, because these are all, de-risking events for me. Which brings us to here, and this idea of, well, what is the balance? Where is the balance point? And I'm just guessing, but it's probably somewhere around here. And we need to at least close above that, and you can do the maths, okay? It's literally take that number and take that number and add them together and then divide them by 2, and you're going to get somewhere around there. We want to see white candle, high closes. We want to see rising peaks and rising troughs. This is important because this is how we know the other turnaround setup, okay? So we know this one, right? We know this one. We're very familiar with that turnaround setup. But then also there are the turnaround setups that occur here, and these are the dangerous ones. These are the really dangerous ones. These are ones I want you to view with far more caution, okay? Especially when there are so many solid supply signals here. And the reason for it is, the psychology behind this is there are a bunch of people stuck in this now, okay? And they were stuck quite quickly because it changed quite quickly. So on the way up, they are just totally believing that we're going to infinity. Right? They're true believers, not like us that believe nothing, that don't care what this stock does. We're just a 3-letter code. So we just follow our model. Okay? They think it's going to $3. Then all of a sudden they're not sure about that anymore. Okay? They're bought in here. There's a lot of traders stuck in the market now around here. So and plus we know that there's people who bought down here, right? Who sold here, right? They're the ones selling here. Right, they're taking big profits. We know where they're active. So we've got a whole bunch of people that are going to be active sort of in and around here, okay? And that's why I say be very careful with these ones, okay? You need to see something that A, is trading above the balance point. B, is trading above the balance point with some pretty serious, hard-hitting white candle high closes, some serious volume coming in, because the only way to trade with all of these black arrows, and I think you're getting the picture, there's a lot of black arrows right now. The only way to trade with those black arrows is to give them cash, right? So think about how hard it's going to be if you know what you're looking at here. Like if you can read a chart, or even if you can't and you're working on fundamentals and you think it's overvalued or whatever, but think about how meaningful it would be if you start to see big volume trading with that supply. So you need to see it. You need to see that. I don't think it's going to happen. I'm very skeptical that this is going to occur here, given those candles. But I don't know the future, and I might be surprised, but at least you know what to look for. High peaks, high troughs, big white candles, and some volume to tell me I'm taking out that supply. I think we're a long way away on that third one, but highly instructive. I mean, I think I got 3 really, really excellent setups to talk about there. Thank you, Mick. Let's go to Peter. And I'll get to everybody tonight. Don't worry, I promise we'll do that. But if I see, like a teaching point, I feel I have to go for it. ACF, and if I don't see teaching points in others, then I'm going to whiz through those pretty quickly, aren't I? What I've done is, because I've moved to Mick's email, I've taken your messages off screen, so let me put them back up. Okay, Acrow Formwork. This is a tough one. I hate trying to analyse these charts. Why? Because where are all my clear signals? Right, they're not there. There's some half-decent stuff occurring. We've got some decent candles coming through. We've got a long-term uptrend ribbon that looks like it's offering dynamic demand. It's trying its best. Almost slipped here, but it came back. But how much confidence do you have in it? Even if we do start to show some nice candles through here, we're probably going to find some supply coming in around there, and then there's probably a bit there, and there's probably a bit all the way up. And in terms of damage done and balance and some of the stuff we've just talked about, I think there's plenty of work to do here. Look, typically what's going to happen, I'm going to do my work each evening, as I do for you, and that's create my scan list. And this would take something pretty special to get back in my scan list. It's going to take some interaction in here, some very strong candles, and then I can probably do it, and it might even take a little bit more. But look, whilst you could argue, yes, Carl, in a very basic sense, there's many criteria, this is going to get filtered out by me just on my experience. Now, I totally concede that I could be wrong, and this is going to be trading at $1.50 in 3 days' time. I don't know that. I can't see that in the chart. I can't see that demand supply. Hopefully you can't see it either, but anything is possible. So I'm going to go a very, very respectful pass on this. It's not a terrible chart. It certainly bring these charts to my attention so we can talk through them. If I was to give it a score out of 10, I'd give it, I think it's more than a 5. It's just, like it's 5.5 out of 10, okay? But clearly, these are not going to get to our endpoint, are they? Okay, so, but please ask them, if only for us to talk through them. Peter's given me some really important information. He said there's a few dividends in there as well. Now, I don't know where those dividends have been paid. I don't know how much they are. And in the fullness of time and in technical analysis, and this is a major flaw of my technical model, everybody, please understand, I can't see where the dividends are, and I really should know where they are. In my heart of hearts, I know deep down, I'd love to know where all those dividends are, and I'd love to have a technical analysis tool that adds them back in and shifts all the candles up accordingly. Okay, so I don't care what price it is. This over here is completely meaningless to me, as you know, unless I'm getting to a round number. So I wouldn't need to devolve it back to find round numbers. Or I could have maybe a little star that pops up, warning, warning, in real life you're a round number. All the computer programmers out there, hey, this is something you can help me build. But I can't do that. It's just, so I just have to take it as I see it, and I just, assure myself as I'm lying in bed awake at night thinking about these dividends that all will be well, my model will come through, and these things will work themselves out. But Peter, I totally accept that, yes, there could be some ex-dividends at play that are actually pushing this price action up and taking it from my 5.5 to a 6.5 or 7.5, okay? Look, if all this price action got shifted up to here, we could be into the 8s. But I don't know, and I have to go, that's ceteris paribus rule, isn't it? All things being equal, and going to keep moving. They are our offline requests, it feels like, at 8 o'clock at night, local time, 11 p.m, oh my gosh, in other places. We've been going for ages, but we haven't because we had technical difficulties. I apologise. So bear with me, whatever it takes, ladies and gentlemen, to get you through. It could be a natural substance. It could be an artificial substance that you might just have in the bottom drawer. But I recommend you get it out right now because we've got a little bit of a ways to go. Okay, let's go to the top and go. Roscoe's saying, for anybody just joining, Carl's having IT broadcasting issues. Roscoe, I really appreciate you taking your time to let everybody know. Sue saying, Sue helping me out with that as well. A few other people doing that. Sue asking about RHY. Let's have a look at that. Now, this one's not ringing your bell. Oh, I'm so happy. These are the charts that get me so excited. As you know, you see them in my watch list. You know my theory on them. We talked about last week. Sort of having a go. If this is out of your comfort zone, just having a go and just putting some, a little bit of hurt money on these, and as in money that doesn't hurt if you lose it is that definition. I think this is wonderful. This makes me very happy. FRP plus 1/3. I have no idea what they do. I couldn't care less. But I do like these sorts of charts. And we know that, look, it could be 1/6, it could be just $50, figuratively speaking. But this is the essence of turnaround, isn't it, here? And we have this beautiful long base pattern. Every poor bastard that was holding on to this in hope that it was going to go to $1 million finally gave up. And I think probably, I don't know, somewhere around about here, the last poor bastard gave up. And that's wonderful because all of those poor bastards are now latent demand, okay? They got their cash back. They said, I'm never going to trade this piece of junk again. And now it's going up. We can't relate to that, can we? We wouldn't have any idea how that feels to be a poor bastard. But that's wonderful because that is latent demand. But the best of turnaround setups is nothing without interest, and for that we need the douche. We need the volume turned up. Volume, as I said, it's like the knob on your stereo. You turn it right up. People across the road, they can hear that killing party, that killer party you got going, and they're all going to come and have a look. And if the party looks good, right, they're going to jump into that party, and that's what we're seeing here. So yeah, look, that's the kickstart there. A little bit today, but maybe a little bit more would be nice. But I'm pretty happy with that one as a turnaround play, purely speculative. But yes, meets all my criteria. Thank you for bringing that to my attention. Whoever it was, I think it was Sue. Now, Sue, I'm curious because I reckon if I go up here, because I didn't see it in my scan today, if I saw it in my scan, it would have been not just shortlisted, it would be a feature chart. And I reckon my minimum turnover filter is a 0 because it hasn't met the minimum criteria. I'm pretty sure I've got it set at about $250,000 in turnover on average over the last month. And you find that they're not there, and then they are, because the volume has come in, it's got that turnover up. So, yes, but that's why we do these sessions on Monday. You guys and girls get to see stuff that other people don't get to see for that reason. Let's go to Max, who's got XRF, which looks very good. That made my shortlist and my feature charts tonight, Max. So I don't think there's anything more I need to add to that. Look, it's a picture of excess demand, and for me, therefore, FRP plus 1/3. Let's go to your second one there, which is SKS. Now, this has been in the model, in the watch list many times, but I haven't seen it recently. Okay, and this is why I haven't seen it recently. It's gone a little bit quiet. Well, I guess we must have looked at it last week, because we've got an FRP here. There you go. Wow, is that one? No, it must be that one there. I reckon it's that candle there. And I've said FRP because it's not a round number. Yes, I know it's a point of supply, but this shadow is exactly where we expect to see the shadow. Like, of course it's supposed to be there. If you didn't get that candle, you'd be shocked. Okay, so that's why I've said FRP on that candle, because there's no reason to do anything else. And none of these candles, in the context of this broader trend, is enough to sell a single share, and there's still no reason to sell a single share. So this one's pretty simple also. I'm just going to go FRP there. It's not a plus 1/3 because the last candle's got an upper shadow. It doesn't really warrant it, but otherwise I'm a happy holder on that one. And DSE also made tonight's shortlist. I don't think I can tell you. No, I didn't shortlist the shortlist. So this is these are the features. And it didn't quite make that shortlist. It wasn't far off. I think if that closed on the high of the session for you, Max, I reckon that would have been a FRP plus 1/3. But it's just been pedantic because I'm a little bit lazy. When you upload about 30 charts a night, it gets a bit boring. So I really whittle them down. And that's not a bad thing for you. That's a good thing for you. But yes, I think you can go FRP on this one, and even actually, I think plus 1/3 on that last candle there. Thank you, Max. Let's go to, and that's been going very well. Hopefully there's a bunch of people on it, because it's been in the list for a very long time, and that would make me very happy if that's the case. Let's go to IPX, which is John asking, can he add more risk to IPX? John, you can do whatever you want, of course. But for me, you've heard my thoughts on that. I'm FRP plus 1/3. David asking, hi Carl, I wondered if previous points of demand limit downside. Example, MIN. Let's have a look. If previous points of demand limit downside, yes, they do. Yes, previous points of demand act as future points of demand until we close beneath them, and therefore this is a point of demand. And I actually did some technical analysis on this exact chart for you today, David. It's on the web page in the aptly named, I have to show this one, so I'm quite proud of it, the aptly named lithium prices have bottomed. These are the highest rated lithium stocks. And, I said what I told you tonight. I reckon lithium prices have bottomed for the time being. And I did not expect them to rocket today, but they did. So I'm going to put that feather in my cap. But I gave you my technical view on Pilbara, on Minres, etc. And I did point out that at 32.33, yes, there is a point of demand down there, and also there is at 29.51. And they are credible. They are credible points of demand. There's been some decent demand came in there at both points, certainly far more in September than there was this one in October. So therefore I would expect the September one to be much stronger than the October one, but you are correct, previous points of demand will continue to act in that fashion. Does that mean we buy them down there? No, that's not my style. I need them to be trading above there. Really, for this one, it's going to take a fair bit, isn't it? I mean, look, don't get me wrong, I don't hate lithium stocks. I think people get very confused about that. Don't hate them. They just haven't been in uptrends for a bloody long time. And there are people out there probably who have only known me as a lithium bear and had no idea that prior to the downtrend in lithium, these stocks were wall to wall in my uptrends list when I was doing them back in the day. Anyway, I'm not going to try and understand the mind of a lithium bull on Twitter. But a fair bit, I think, needs to happen here, unfortunately, David, to get a nod from me. But hey, you can do whatever it is you want to do with your money. Current price is 37. If we saw similar demand again, would it be a reasonable entry point? No, not for me. No, completely breaking all my rules. If your question is, can I buy if it gets down to there? The answer is, I won't, but you can do whatever you want to do. You know my rules, David, and you have a choice whether you follow them religiously to the letter or not, or you mix them up with stuff that you like to do. And that's not such a bad thing either. You've got to find a system, a model that works for you. If you can't follow it, then it's useless to you, right? I like my model. It works for me. I always follow it. I never break my rules unless it's Bitcoin. And I tell you what, I've got that already loaded up at 99,500. Okay, that is loaded up to sell. I'm going to sell some at. I was going to sell a third, but I've actually got a half up there to sell at 99,500. So we'll see what we do with the other bit after that. But I always follow my rules when I'm trading stocks, because stocks are like cattle, ladies and gentlemen. People think stocks are safe. Stocks aren't safe. The only safe stock is the one that looks like that. Okay, because then you like, is that safe? Like, is that blue chip? What the hell is a blue chip? Domino's is blue chip. Everybody loves pizza. Ramsay Healthcare. People always go into the hospital. Look at that. We go on and on, but we won't. We were looking at XRO, which thankfully is the antithesis of that. This is in the shortlist and the feature charts tonight. Change the screen. Thank you so much. That's why I put my earplugs back in. What were we saying? We were saying things like we were denigrating the good name of Endeavour, and saying, is that a blue chip stock, or Domino's, or Ramsay Healthcare? And this is what we're saying about always following our rules with stocks, because stocks aren't safe. Stocks are risky, and we must always respect that. This isn't a risky stock at this point in time, but it could be risky tomorrow. We don't know. But for now, nothing but FRP plus 1/3 on that one. Let's go to ALL Perry. Of course, these are Perry stocks. Very interesting. We've gone to AL3 for some reason here. That doesn't matter. Worth pointing out. This made the shortlist today. Didn't quite make the feature chart because of that little upper shadow there. But I felt, on balance, there's good things can still happen here. Yes, we've got a big point of supply there. So when your tradecraft kicks in, you might want to consider that against some of the other setups. Where I was heading was ALL, and 100%. Isn't this amazing? Talk about US earnings. Talk about US Trump winner, and fewer controls and gambling and things like that. Most likely. Couldn't get a better case scenario here. FRP plus 1/3. Thank you, Perry, for those two. Dave's got a second question about Tesla. We'll look at that when we get to US stocks in a very, very short space of time. Who's got Weebit, which is a little bit frustrating for me. This is one of the stocks that I've done very well out of shorting. You can't be in a short position anymore. Okay, so about there is where you 100% you're reducing risk, but I think it's really starting to become untenable at that point, and certainly there's it's zero risk position. As for whether this is a turnaround play, it's not far away, and today's candle, today's volume made it very interesting for me, and I did consider it, but I think it's too early for some of the reasons we've discussed prior, and that is I just want to see a little bit more work here. I want to see a supply side response, and then potentially on that next dink, this would qualify as a turnaround setup, but it still needs a bit of work, in my opinion. I'm happy to give it another buck if that's what it takes, but I have to follow my rules, because when I don't follow my rules, invariably I lose money, and I feel worse about losing the money. If I lose money when I'm following my rules, I actually don't feel bad about it, because if I follow my rules, I know I'll do well. I have that unwavering faith. So it makes it makes it so easy to take a loss. That's bullshit. That's bullshit. But it makes it easier to take a loss, right? But when you don't follow your rules and you lose money, that is the most bitter pill to swallow. So not yet on that one, but not far away. Let's go to IPX. We've already talked about that one. I'm very happy with it. And AIM, I still think looks very good. It made tonight's shortlist. Didn't quite get to the feature list. It was very, very close. And I just felt with this last drive down, it really probably should have been above maybe that peak. And that's all. It's very subtle, and I deal in halves out of 10. And it just pulled this back. But don't get me wrong, it made it into the broader watch list, which means by default, if it's in that watch list, it's an FRP. But it just didn't make it into that higher conviction list. But the higher conviction list isn't always the best. I think you're starting to figure out, look, generally it is. If not today, generally those high conviction ones over the next few weeks tend to be the really, really good performers. But, often something that isn't in that high conviction list today will make it in tomorrow or the next day as well. So that's still very, very good for me. Thanks, Huzul. Let's go to Barry. Your ChartWatch daily ASX scans after importing to TradingView has a padlock. Oh, the list is locked at May. This is the first time it's happened. Look, maybe I may have accidentally clicked the wrong button there, Barry. So let me double check that for you. But that was definitely not intentional. So let's go to here. And let's go to here. And I can't, if you tell me where to look, it might make it easier. But I can't see anything with a little padlock on it, if you get where I'm going. Logo, ticker, display, table view. There is a sharing option. Share list is on. You can see that. Let me. A big risk here. Turn it off, all right, and turn it on again, and maybe try that over here as well. There you go. Was the downtrends list working? I don't know. Is anybody else experiencing Barry's problem? Let's take that offline, okay, because I think we want to get through the rest of this, but duly noted, Barry. Hopefully that is going to work for you and everybody else. Rapam saying, last week's difficult charts seem to be the easiest charts today. We'll do those US ones in a second. Barry saying the Trump bump in stock markets, another factor for big bump, is no insurrection. Yeah, look, it is, this is what I said at the start of this, is a lot of people go, oh, the whole world's going to go to hell in a handbasket, Trump and his tariffs and blah, blah. You are missing the point. This massively de-risks US markets, more specifically, but it is generally de-risking factor, not a increasing risk factor. I was trying to find a better word there. Roscoe's got IoT in the US. We'll come back to some more US stuff. Oh, we're going to be going to about midnight tonight, ladies and gentlemen. Carl, please discuss preferred action for breach of top and bottom of short-term trend ribbons. I think I have done that in that we want to see the dink. So when we are breaching the ribbons, and I'm very fortunate because I can see an exact case study here, right? And I shouldn't have to look far to find teaching points, okay? So that's exactly what we're talking about, John, is that when we're testing that ribbon, we we want to see some interaction, some supply come in, and then we want to see how the demand side wins. It's a balancing point, isn't it? It's like we've reached equilibrium in the whole scheme of the supply-demand spectrum, and now we want to see who wins. Who's going to make that next step, that definitive step that puts the other side of the market on the back foot and not wanting to interact until potentially much, much higher prices. And in this case, that big white candle signals it's the demand side. And the supply side gets out of town there. You end up with a supply vacuum, and it actually facilitates the next move up. So that is a good example there of the price action you want to see when you are interacting and breaching those ribbons. Roscoe asking about Brainchip. That's certainly made my shortlist today. It's been in there fairly recently. I think the last time I put it in here, and then we got to the point here where we said, look, you're probably going to have to knock a third off the table. And if you knocked a bit more off than that, then you're probably very frustrated with it because I did run it here as a plus third, and I've run it here as a plus third as well. FRP plus 1/3 on that one. If it's the best one you can find on the day, I'm going to say, look, it's one of those warm ones, 7.5 out of 10. As far as the turnaround setup goes. Whereas the other one, that Rhythm, that was quite a clean one, isn't it? There was very little holding that one back, for example, to put things into perspective. And then we talk about people are talking about the $1 round number, and many people got that right, which is fantastic. Different Roberts got not that one, but let's have a look at this one. That's interesting. Oh, I don't mind this one. Look, next high candle close into 118. We're going to have something here, so keep an eye on that one. Kairos Minerals, complete accident. Don't know how I got there. POL, not adding risk today for obvious reasons. I'm going to give you two reasons why we're not adding risk. For the really tuned eye, you've already picked up on it. One is, I think we're too close to $1 now, right? If you're trying to squeeze, is it fair to say, everyone? If you're trying to squeeze that last 10 cents out of this one from here, I think you need to move on, right? That doesn't mean you have to sell everything you've got. I think there's more in it. I think there's almost a gravitational pull of $1. There will be supply that will not sell until they get to $1, right? They want that dollar, so there's a supply vacuum. If demand is still keen enough, we can get there. Today's shadow is not ideal, but it's certainly not a deal breaker. So happy holder, FRP, but obviously not adding a third because of the shadow, and I think proximity to $1 on that one. I think we're more now looking for our de-risk events here rather than our increasing risk events. There's got to be one word I can use that's the opposite of de-risk. Add risk? I don't know. Let's go to TMG, Trigg Metals. Oh, we had a bit of a setback on this, didn't we? Last time we looked at it here, clearly I said that candle was not enough to take risk off the table, where I really should have said it was. No, I don't mean that. I'm being facetious here. No, I will stick with that call. It wasn't enough given the context of the trend and what we saw at the time to take risk off. And I no doubt you've been cursing my name ever since, for whoever asked this one, Robert, because it did come down. But I can't see the future. But we do know, look, it is a supply side candle. I just felt it wasn't enough given how everything else looks amazing up until then. And we weren't quite at that supply zone. We weren't far off it, but we weren't there. Look, we've bounced off really well. Are these candles to exit? Look, if you took a third off the table, then I really think that's the only point that you would do it. And even then, you've got to question, well, it's actually trying to bounce in the green zone, maybe give it another day. Just give it another day. Like, if this was a low close, all over it. That's your minus third. But you might just give that another day. And then that, you can see how important that extra day is. It says, well, actually, you don't really need to worry too much about it, because it looks like the green ribbon's holding, because the green ribbon is just doing its job, right? So I think you kind of stuck through with FRP. That's my feeling on it. You're still FRP, no doubt about it. Are we adding a third? I don't think you're far off. I actually don't mind it. Like, is this so bad? I don't think it's that bad, because this is all one move up. There's no trough in here. This is all one trough to peak movement. And therefore, this trough is coming in at or above the second from last peak. So this is actually still good price action. So I actually don't mind this. Look, if it had a close on the high, it would be an absolute lock. Just give me next high close. Give me next high close on this. And maybe that's being just a little bit pedantic. Next high close plus 1/3. Maybe that's being a bit pedantic, but I still think this is very strong. I could probably get rid of that now, can't I? And just stick with that. That's fine. Okay, let's go to AZ9. Oops. AZ9. No, not there. That's okay. Go to the big list. AZ9. FRP was our last call on this. We've got some problems here. Like as a pair, right? As a pair, they're not great. We don't really want to see that. No doubt there. But close beneath that, that's 100%. We're going to take some risk off the table. The question is whether we give it the benefit of the doubt tomorrow. Look, I think just give it the one more candle, a bit like the last one. And another candle confirming. So let's go next. Just to save a little bit of money on this one. Next low close is going to be minus a third in this instance. And certainly we know a close below here. That's just what the model requires. A minus a third on that one. Yeah, I think that's enough on this one. Otherwise, I think you can still keep a third at worst, even after that, to see how we go around here. Okay, so question mark, dynamic demand. But we look, typically with these, we want them to happen fairly quickly. Okay, because if they're going to base out for a while, it could be a month, it could be 2 months. We can always get back into these if they're going to make that next leg, but they're just not ready for it. The candles should stay green. These are momentum trades. Okay. So we're just seeing a bit of latent supply still coming in around that level there, and 10 cents, probably on a few people's minds. Barry saying, regarding the padlock, it could be an issue at your end. I don't know. Let me know, Barry. Let me know how you go. DCC, if I have time. Well, I don't really have time. I want to go to bed at some stage, so do you. But yes, it looks great. Look, there was a little dink here, but not really. Well, actually, there is. There is. There you go. So if we you know the rule. I'm not making this up as I go. I've taught you the rule that a short-term downtrend, equals lower, high, and still there. Lower high end. I accidentally put the whole computer to sleep there. Hopefully you're still around. Lower high end, or you're still awake. Lower high and lower low is a short-term downtrend, right? So by definition, therefore, this is how the peaks and troughs work here. This is all one continuous move up because there are no lower highs and lower lows. So that is one continuous move. And the whole point of this will become clear in a second. There's your dink. Okay, so that has come back and tested. And we've seen a supply side showing, and then we've seen an emphatic demand side response. And therefore, it is actually doing everything I'm asking of it. And therefore, that is an FRP plus 1/3. And what's even better about this one, and we've talked a lot tonight about quality of turnaround setups. You sort of look at this and maybe that rhythm one, and we sort of see, well, maybe I spent too much time explaining a few of the other ones and why they weren't quite getting into the higher, scores out of 10. I think this is a very good one. So I'm definitely FRP plus 1/3 on that. It hasn't come up in the watch list because of that line that's been highlighted there. Hasn't made the minimum turnover filter, but that doesn't mean it's a bad trade. Just means it didn't make the minimum turnover filter. And this is obviously Digital X. So this is the Bitcoin company. What do? They do some Bitcoin stuff. There you go. Very vague as far as I'm concerned. Let's go. Are there US ones? I think there is a Wisetech and a BHP in there from Francine. I haven't said stop typing them in, and that's a big mistake on my part. I really should have said that. What did we say last time? Last time we were clearly concerned about some supply coming in at the massive point of supply, but we're actually pushing into it really well, aren't we? We're actually starting to probe into there. This is a good example of having at least the balance point overcome. I'm pretty sure we talked about this on this one before. And look, I think we have. So it's one that I think I can trade, when we're sort of a bit more around here. And that's just me. Maybe I'm being a bit overly cautious on this one. But I did tell you at some stage tonight, it feels like the longest webinar ever, I take these ones very seriously, these turnaround plays. They can be very dangerous when you've had these sharp reversals because of all the latent supply it creates in the system. And you can be going along what seems like very easily until you get to that point where those big supplies that cause this want to supply again, and then you get that lower major peak and it falls away. You can probably imagine, your mind's eye how that looks. But this is fine. If you've got it, I can hold it. But at the same time, I'm going to try to be really attentive to those signals that maybe that supply is starting to manifest itself in the system near those highs. In fact, probably around here and above. Please don't type any more in, please. BHP, I didn't put this on the short list for shorts. I think I did. I think it was in the 1/3 list, didn't make the feature list, but not far off it. I think that's got some problems again, closing below, big gap, big run, low close. Do I think this is going to go to $30? No, I don't think it will, but I think this is probably going to get closer to, 38 before it gets closer to 50. Yeah, I do. So it's just the way it is with BHP at the moment. It's not a great chart, to be honest, to muck around with. And I'm building a trading system at the moment. And I'm actually using BHP as my base case because it's just so choppy. And if you can make, and particularly through here, I'm doing a lot of my analysis through here at the moment. And if you can make BHP work through this period here, and by that I mean, maybe taking a couple of trades, maybe 3 trades in there, and just not trading through the rest of it, like you've got a system that's worth a lot. I will show it to you eventually. I almost said soon, but probably not soon. Probably eventually. Probably over the break. I'm going to take a little bit of a break over the Christmas New Year break, and I'm going to plan to work on it then, or spend time with my kids. I don't know. That'll be a tough one. Let's go to request to write the rating on discussed charts so we can evaluate in the future. Ask Sudesh. How about you write the rating, Sudesh, and then hit me up on Twitter and I'll tell you if you're close. How about we do it that way? Regarding dividends, in TradingView, you can both see when dividends happened and also adjust the chart to account for them. What? Says Max. All right, I will investigate that, Max, if you can send me a screenshot of how I do it, because I'm too old to figure that out and to set in my ways. G'day, Carl, says Matthew. The US ones, we'll do those in a second. TTT. which I can never get on Amy Broker because it doesn't let you get triple letters. So we've got to go something like TTV or TTX. Or we go, let's go, TXT, U, and then work our way up to TTT. That's how silly this thing is. There it is there. Happy holder. Obviously, it's been on the list many times, as you know, for good reason. And there's nothing. That candle's irrelevant in the whole of the proceedings. So an FRP here, obviously not any risk because that last candle doesn't warrant it. CU6, sorry I missed them earlier, Avant. Yes, you're always welcome to put them in a second time if I miss them. Look, this is one of those turnaround plays, one of those sort of dangerous turnaround plays we've discussed. Therefore, I think I really want to see some strong demand side signals because ultimately this is the bad that we need to overcome. And that candle is what I call the dominant candle, if you've ever used that term before. And it shows you is the fingerprints, really. It's the fingerprints of a massive fund or possibly a few big fund managers who really were quite motivated to sell. And, you know, if they're not out, there's a good chance they will, pick up where they left off. Let's get rid of that. Because I think I was saying, if you see the black one, obviously take a certain course of action. If you see the white one, take a certain course of action. We didn't see the black one. We didn't really see the white one either. So I think we're very neutral here. If you've got it, I would say, well, you probably shouldn't have it because I can't see any reason to have it. But if you have it for whatever reason, I'll go FRP question mark. FRP, but I'm not adding risk because there's just not enough upside momentum. You can see that what I mean by that, the peaks and troughs are very overlapping. The candles are quite mixed. I'm going to say there's a slight predominance towards demand side candles there, but even you can see there's lots of shadows pointing both ways. Tell you the market's indecisive. There's actually quite a lot of equilibrium here. We don't want equilibrium. We want an imbalance towards the demand side. So let us go. They've got a bunch of US ones to do after this. Hub is easy. That's the hub chart, apparently. Let's go zoom normal. There you go. Let's go delete all studies. That didn't change it. Well, hub, it looks like it's trading at 8,500 for some reason. It's better. There you go. But yes, this didn't make the final list because it can only go in the feature list 4 out of 5 times a week or something. It's just in there every other bloody day of the week. But let's go FRP plus 1/3. I would like to think everybody listening tonight's owning Hub, surely, because it's been on my list so many times. Surely you've taken the bite at some stage. A bunch of thumbs up, good. And hopefully you've still got every single share. Give me another double thumbs up. Give me the bursting thumbs up if they exist, because you have not had a single bloody reason to sell a single share of Hub at this stage, and that's what's good about my model. That's the value. Okay, let's go. Bitcoin, Ethereum. What can we look at? Amazon. Can we look at cryptocurrency tonight? Okay, we are done here. We're going to move back up the list, and we're going to do it astonishingly quickly. Let's go. Bitcoin. It's definitely worth. We can't not mention Bitcoin tonight. So let's talk about it. Still looks fine. I've told you my view. Actually, it's. I'm going to sell half when it gets to 100k because that's the next round number. Not because I'm being a smarty pants or anything like that. That's just my model. It should, in theory, it should be a third, but, you know, I'm feeling like it's kind of a half kind of thing. But 100% I'll be holding the other half because who knows where it's going to go next. If I see a nasty candle there, I might reconsider that, but I think half's probably enough. Until then, it's an FRP. If you want to buy some, that's up to you. I did say, I think about 2 sessions ago, if I'm not mistaken, quote unquote, Carl, if you have never owned Bitcoin before, now is the time to think about buying a few. I didn't say load up the house or whatever it is, or FOMO or laser eyes or diamond hands. I said you might want to buy a few. Let's go to Ethereum, which I also do have Ethereum. It's been, you know, extremely disappointing. Starting to pick up a little bit there, but this is clearly this, you know, this is the other white meat. So yeah, I'd love to offload my Ethereum, I reckon, and yeah, something towards sort of 3.6 to 3.8 with the wrong candles. I reckon I'll be looking very closely at that. If only because I just don't think it's the winner in the race, is it? Ethereum. Diehards will argue on that one, but you know, look at the evidence in front of you. Dogecoin. Let's have a look at Dogecoin US dollar. Jeez, I don't know. I don't have a look at this stupid thing here. Look at that. I've never seen that before. I haven't watched. This is the Elon Musk thing, isn't it? This is Elon Musk right there. I don't trade Doge, but I should. I probably should. Not because I believe it or don't believe in it, just simply because it's a bloody good chart. Yeah, look, I mean, I'm not a buyer on that last candle, but I would happily buy at some stage. So that's new, that talk. Let's go to Floki, which is, I guess if you don't own one dog coin, I don't mean dog as in bad, but you know what I mean, then you have to own the other dog coin, don't you? Just own like for the same reason I said I'd rather have all my Ethereum in Bitcoin. I think you'd rather have all your Floki in Doge. When you just, this is crypto, stick with the winner. Don't play the second fiddle. It hardly ever works out. And talking about second fiddle, Jesus, I didn't mean to bless him. I generally did. I'm a good Catholic boy. My surname is Capolingua. But Solana and this, the craziness and the stupidity that was, of course. I haven't looked at crypto for a very long time, as you can tell, apart from my own ones that I own. But that looks great. Yeah, no complaints. Looks fine to me. Happy owner there. FRP, happy to add a third. Very interesting. Thank you for taking me on that walk down my memory lane there, Amber. I'm happy to look at them if you want to do them. But I own what I own, and I have no interest in adding more to it. My goal is to get out of crypto when these round numbers are hit, and then never trade it again. Because why? I'm so good at the other stuff I do. And I can never follow my rules for crypto for some reason. So, if you know it's not working for you, although I am going pretty well now, I'm going to make the most of that, get the hell out. And I don't take it seriously, and that's the problem. I don't take it seriously, so I don't follow my rules. Whereas when it comes to trading my stocks, there's no leeway, right? So always stick with what you're good at. Let's go up to TWLO. It was always a bit of fun, and then it became a little bit of an obsession. And then back to just not bothering with it anymore. Now we are on a weekly chart, so let's go back to the daily chart. Oh, wow. The only criticism here is a ways away from the light green zone, but no complaints about owning it, no complaints about buying it. The only other complaint actually that I can see now is that it's proximity to $100, but it's not like this is our first rodeo at $100. But if it has spent quite a bit of time around the 50s, it can still play a factor because it's quite a long time ago since we were last at 100. So it becomes part of the market psychology again. Look, apart from that, this is all quite fluid through here. Because it's quite fluid through here, it can be quite fluid therefore on the way up. And really the next big point of supply is up around 180. And that's really not relevant at this point in time. So absolutely happy holder if you've got it. Look, I'm not going to put the FRP, I'm not going to put the plus 1/3 on it because of that proximity to 100. That's the only thing holding me back. Otherwise, and the distance or lack of proximity to the light green zone. But I have no reason to sell any shares just yet. Okay, let's go to the next one. For Nicola, which is PYPL, PayPal Holdings, something no doubt all of us use every other day of the week. Not bad there, unless there are some dividends in there, which, US stocks, that's a great thing, they don't pay a lot of dividends, so you don't have to do a lot of adjusting. I don't think there is a dividend in there, but correct me if I'm wrong, and I know there's some sort of, somebody was telling me there's a button I can press here, and I have seen it in the past, but don't ask me where it is now. Do I dare go here? No, I'm not going to do it. Okay. Yes, this move here does concern me a little bit, and you might say, Carl, that's fine. It's all in the history. It's all in the past now. No, those things still concern me. The fact that it could happen, it undermines my confidence. Like, if you're so good, this really shouldn't happen to that degree. Otherwise, it looks good. I know that's a big otherwise, and it kind of makes everything else I'm going to say maybe a little bit redundant. Next, point of supply up 123-ish, and there's one here at 102. I don't think they're going to come into calculations anytime soon, so they're not an issue. But look, very, very strong. I'm a little bit dissuaded by that, and this will come down to a score out of 10 sort of thing, where I'd give this, look, 7.5 out of 10 easy. But I reckon we're going to find, high scores down the track. If you've got it, FRP, no question about that. I could have had a third if this was hey, I love PayPal, I use it every day. I don't know what makes you tick, but if you wanted to go, I could go. But I'm not going to write anything on that one just at this stage. Not a bad setup. I'm just a little bit concerned about that last little bit. I want to find something that doesn't have that last little bit, if I can. This one doesn't have that last little bit. So whatever caused PayPal to have disruptions through here didn't worry this one. Macro, micro, economic, it didn't matter. Interest rates, it didn't matter. That's the sort of price action I want to see, especially during an uncertain market as well. So yeah, this is a happy holder for me. That candle doesn't worry me. I might go next high close on this one. But look, if you wanted to buy this one, no complaints at all. That little bit of a black bit at the top there is irrelevant. I think very fluid. There's a little bit there, but not worried about that. Very fluid all the way up, so nothing on the weekly chart there to concern myself about. Look, I'm going to go FRP plus 1/3 again, and the only thing that might make this better is if you had a slightly higher close, but being a little bit pedantic there, to be fair. Okay, plus 1/3. So happy with that one. Thank you, Nicola, for those three. Moving up the list now, we're going to go, in fact, we'll do the offlines before I forget. Craig's got Riot, there we go, Riot Platforms, which is more of a turnaround play. Obviously, we can see great price action through here with the candles, not great price action through here with the troughs, but obviously holding where it should. Just like magic, isn't it? The short-term uptrend ribbons, long-term uptrend ribbon, going from acting as dynamic supply through here to dynamic demand. So tick, tick, tick. Coming up, testing in here pretty well. It's definitely a turnaround setup. Definitely meets the criteria. Good volume push. No complaints. Yeah, look, again, the only thing is whether I can find something slightly better that maybe didn't have that slightly weaker price action before, but it's being extremely pedantic. I just want you to understand some of the nuances and potentially how to differentiate between very, very close setups. I'm not worried about this point of supply. You might be saying, Carl, what about it's at the point of supply? Yeah, it is, but look at this very strong candle we've had. We're not worried about that point of supply. So happy holder there, plus 1/3. If that's the one you feel is the best turnaround setup you can find for you, that was Craig. Craig's got Palantir next, PLTR, which is the artificial intelligence company. Wonderful, wonderful. And yeah, look, and even this, it's fairly normal price action. It went back, held the light green ribbon, whereas the one we saw before, which was PayPal, it traded beneath it for whatever reason. So yeah, I mean, this is not great price action, but you can see it's still very orderly price action. And then it's like you don't get any better than this candle, this candle, this candle. They're all amazing candles. As far away as that is, I think this is one of those where you still put some risk on it, because you bite the bullet and still do it. It's FRP plus 1/3 for me, and I don't think we're going to find anything on the weekly chart, are we? I didn't think so. Blue sky from here, so I like it even more as a result of that. Let's go to Craig's third one, TEAM. Escape that and undo that and type it in again. Atlassian Corporation, which is looking very, very good. You know how much I love gaps. I love to buy into gaps, especially in the US, especially after earnings. The only thing that's holding me back is the proximity to that major point of supply. But I've got a soft spot for that gap. And this will come down to, look, I'm going to go FRP plus 1/3 on the basis of just how powerful that gap is. Everything else checks out, you can see. Short-term uptrend ribbon, long-term uptrend ribbon, acting as dynamic demand, nice little dink, nice little consolidation just above them as we change trend, a classic turnaround setup. Strength of the candles telling me maybe we're not that worried about that as maybe you would otherwise expect. This gap very strong. But again, this will come down to your tradecraft and your reward to risk. You might find something that is more appealing than this, but we won't know because that's not what we do here. We look individual setups, not holistically, every setup for every day. And that is your three there. Craig, Peter, I know we're way over time here, but I did commit at the start of this to do everybody, so I'm going to fulfill that commitment. We wouldn't do this ordinarily any other week. I lost track of time when I normally say, hey, everybody stop putting new ones in. FRP, obviously, on the last candle there, plus 1/3. Escape. Undo. Oh, there we go, back here. There we go, let's go. Control Y, we might do something. No, it won't. Let's go back to TGTX. And all I wanted to do was just let go of what I was holding before, which happened to be the Arrow, isn't it? And that's where I'm not as used to this one as I am to Amy Broker. Okay, copy paste. That's all I was trying to do. FRP, no questions asked. This is a fantastic setup. This is the best thing I've seen all night. And when I go to here, I reckon we're going to be clear. No, we're not clear. But at 35.80-ish, I don't think that's an issue. And I vaguely remember saying this last time. We put the FRP of the plus 1/3 on it, so very happy with that one. For you, Peter VRT. Peter, I know you got this in a bit late today. Please, I only just saw it. Like, you're lucky I saw it. Please get all requests in before, at least an hour before the webinar. That would be wonderful. This is fantastic. Yeah, I'm going to forgive you on that one because you've given me two fantastic setups, and this one's even better than the last one. So this is now my new favourite chart of the evening, and also we've covered it back there. That's why I like to do these FRP plus 1/3, because it does show us, I think, many times that the model does work. Let's go to your online requests for the US and continue and finish those. And we just finished with Nicola, and we're going to Matthew. Matthew's got IESC, which is IES Holdings. Fantastic. Matthew, wouldn't expect anything less from you. Looks even better there. I shouldn't need to explain these. I mean, sometimes I over-explain things in Australia, I think, but this requires no explanation whatsoever. I mean, this is the epitome of my model and what it's aiming to do. This is the epitome of excess demand, and that's what I'm after. Let's go to, and notice what we don't talk about in these sessions is what these companies do, their earnings growth profiles, their, I don't know, net asset backing, dare I say, that's an old chestnut, isn't it, net asset backing. In our data, we just say, holy shit, that's a big gap in a white candle, plus 1/3. And that's where we are on this one, FRP plus 1/3. Oh, that's gone up too much, Carl. No, you are going to never buy that. Aren't you worried it might go down? No, I'm not. Plus 1/3 on that one. This is one of those ones, remember I said last week, if you haven't popped your cherry on them yet, then this is the one you put $50 on and see how it goes. If you probably put $50 on the Melbourne Cup and just have a crack at these. Are you going to bet the house on this one? No. Are you going to have exclusively these charts in your portfolio? No. But you're going to have throw them in to mix it up. Thank you for bringing that one to my attention, Matthew, and indeed all of those other ones you showed us. Let's go to the only one I didn't look at, Francine, was Crip, but it is in my feature charts tonight, so I won't look at it, but I will tell you FRP plus 1/3, and you can have a look at my feature chart in TradingView, in the TradingView watch list. If you don't believe me, let me prove it to you. It is right here. There you go. I didn't have to go far, did I? Okay, FRP plus 1/3 on that one. Let's go to up the list. Don't worry, I think we're actually going pretty well because list-wise, we're getting close to the top. Right, Roblox Corporation. Fortunately, my kids, who are now 12 and a half and 15 and a half, don't play Roblox anymore. In fact, if I told them to play Roblox, they would be so just mortified and embarrassed. Let me just put it a different way. If I made them play Roblox and then invited a bunch of their friends over to catch them playing Roblox, they would literally die. They would just expire on the spot. Fortunately, I'm at that stage. If you have younger children, you're not there yet, and you are no doubt paying for Robux. Now, we have to go here, 73.50. So miles and miles away. There's a little one there, but we're interacting with it now. So not a problem, and it's all good. I don't think we're going to buy it on that last candle, but that last candle is nowhere near enough to sell any of our shares here. So we're full risk position. We're just waiting for a next high close for this one. So FRP, I'm happy to get next high close. It probably won't happen in the next couple of candles, but because of that last candle, it's a little bit bearish, but it is not enough of a reason to sell any of these shares. I love gaps. It's consolidating there well. It's not going to go up every night. I think we're fine. Let's go to the next one here. So these are from different Robert. SPOT, which is Spotify. Okay, Well done, Robert. You have transitioned from what my kids used to be into to what they're into now, which is listening to their favourite music on Spotify. Taylor Swift, Olivia Rodrigo, Gracie Abrams, Sabrina Carpenter. That's number one. That's what she listens to. And I have to listen to in the car. My God. I can't listen to another song about a lost boyfriend. Will you be my boyfriend? Or will you be my boyfriend again? Like, seriously, girls. Now, Spotify, I think this looks great. I listen to AC/DC, I listen to Pearl Jam, a bit of Radiohead, that's what I was listening to today, and then she kicks me off. Like, I'll be listening to it, and then Taylor Swift will start playing. You can't imagine my horror. It's all good. Not buying, not adding risk on that last candle, but certainly FRP, what a wonderful trend. I mean, this is just the most amazing trend. A next high candle, absolutely. There we go there. Escape and save. They were only two. We should have gone to Snapchat. Is there Snapchat? Is there Snapchat? Because that's the one you want to buy, ladies and gentlemen. Oh, Snap Inc. Oof. How is that not doing better? I mean, they are clearly not monetizing their user base. I tell you what. I hope their servers crash and can never be restarted. IoT, unless somebody's long, and then I don't. But I don't think we are. IoT. Samsara. Looks great, no complaints. This one's an easy one for me. We're going to grab that. I'm going to go copy paste, and I'm just going to check out the corner of my eye to make sure that there's nothing holding us back from doing so, and there certainly isn't. Did I save that? Didn't mean to. Let's go back to here and to here, and then just save it again. And we're going to keep moving. Thanks, Roscoe. We go to Rupam APP. If you need to leave, leave. I'm not making you stay here by any stretch of the imagination. Let's go FRP plus 1/3. You know why. Rupam, it is absolutely amazing. Hopefully you're on this one, and hopefully Rupam, you are absolutely killing it. Well done. Well done. Kudos and congratulations to you. And keep in mind, we're not far away from 300. Okay, so I'm thinking anything over 290. You might just want to just nudge a few out. Okay. Of course, it's up to you what you do, Rupam. It's not up to me. Let's go to your next one, which is FTAI, which is one we've also covered quite regularly. Yeah, I can see every reason why. There's nothing so sinister here. That's a nice long shadow, so we're okay. Hang in there. And FRP on that one, I can take the next high close off because we're already at high close and go plus 1/3. Happy with that one. And CVNA Carvana, if I'm not mistaken, there we go. In a gap, and you're looking good. You're sitting pretty here as well on this one. And it's interesting. This must be to do with this on that one. And if I said FRP on that black candle, I'm quite proud of myself actually, because yeah, I agree. I agree with myself on that one. I'm just trying to copy it and grab it and go here. And look, minus 1/3 next low close. So I kind of gave it a warning, didn't I? I gave it a warning. I said next, and we've actually talked about this a bit tonight, about seeing that candle that we're not sure about. It's not enough to pull us out of a third, but it's certainly got our attention. And this idea of giving that one more candle and seeing if the demand side does fight back or that supply side really is reinforced, and then taking action on that. You can see, it's kind of worked out here. FRP not adding, I don't think that last candle is strong enough, but certainly every reason to continue to stick with this one. Thank you, Rupam, for those three. Let's head up the list and maybe finish pretty soon. TSLA for David. Big white candle there. I haven't looked at this chart for a while. I wonder if it got a little bit of a Trump bump. Did it not? That's a weekly chart, so we are clear up until 383 if we need to. I probably should have looked at the daily first. And it's all good, yeah, big, like through that supply zone that's we've identified in the past. We were FRP on this actually, plus 1/3, not that long ago. And I can go FRP. I don't think I'm plus 1/3 on that last candle, just to that little upper shadow. But certainly, let me undo that and to go next high close. Next high close I am. So click OK, because I think we've got enough room into that 383 level. Second question is about Tesla in the USA, especially latest large white candle with small upper shadow above the previous point of supply at about 3:13 August. Is the current trend still intact? Yes, I have answered that question, David, and I'm happy to go another plus 1/3 on the next high close. We have answered all of those. We're getting close. We're getting close. We have finished, ladies and gentlemen. Holy moly. Let's go back here and let's all give ourselves the biggest pat on the back for getting through that marathon session. Always remember our celebrations over there. Well done. Everything we've talked about tonight, as incredibly intelligent and insightful as it was, is general in nature. It has not taken into account your personal financial circumstances, objectives or needs. So before acting upon any of that information, you should consider it carefully and seek help as to the appropriateness of that information to you. Always remember that, look, trading and investing is risky. It's been easier, hasn't it, for the last week or so? I think we all agree on that, but it can get hard literally tomorrow. So look, always manage your risk. That's rule number one. Rule number one isn't make as much money as you can. Rule number one is protect your money with every fibre of your being. Ultimately, it's you, it's not I, who's responsible for everything you do. But apart from that, it has been an absolute pleasure chatting with you this evening. Thanks for hanging around, whether you are listening live or you've been watching this recording for the last hour and a half. All the best for your trading and investing. Till we catch up again. Bye for now.